traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to share with you some of our wave counts for this week. So before we start, I want to show you the membership, the Elliott Wave Street membership on elliottwavestreet.com. You can click on the membership tab and you're gonna see the plans that we have in order to access our daily market analysis. And there is something else. We have the Members Academy. The Members Academy is growing with more topics, educational topics as the Elliott Wave Crash Course, strategies, and more. But next week, we are launching inside the Members Academy the Candlestick Elliott Wave course. It's gonna be a fantastic course with lessons about candlestick patterns, but of course we're gonna review the classical patterns, but it's gonna be more about price action, like the meaning of each candle in terms of size, in terms of tail, regarding the price validation and the Elliott Wave cycle. So it's something great that I'm getting ready for you, so you are gonna have access if you sign up for any of the plans. All right, traders, so let's talk about the live market. So this is the euro. I would like to start from the 4-hour chart. If you have been following the analysis on the euro, we have been doing this plan. We have been following this plan. So first of all, let me move my chart a little bit more to the left. There we go. So first of all, we were looking for the price to finish this market cycle and move down back to this low, right? That was the plan. So finding the end of this thing and going back to this low. Once we have the price below this low, to start bouncing. So the Elliott Wave plan has been working nicely, but the trading in terms of liquidity is really bad, because look, there are two types of reversals. We have the regular reversal, where is when the price is moving down, eventually stops trading down and makes a bounce, makes a low, makes a bounce, makes a low, and this process can repeat 1, 2, 3, 4 times. The key is when we have a 5 up on lower time frames, we will know that that's it. But more than that, that's the regular accumulation setup. What is happening behind the scenes? Well, the institution, the market maker, the liquidity provider is the same institution. They are accumulating, they are buying all the possible number of contracts. In this case, the euro, or it could be a stock, or it could be the Bitcoin, whatever. And then once they complete the accumulation, they let the price run, and the plan is to have enough stock in place to sell the other participants. Because when you buy, let's say you buy here or you buy here, someone is selling to you, and that usually is a market maker, and the market maker has the possibility to sell you because they have plenty of stock of that instrument. But what if the price makes the move down and immediately returns? This is known as the V-type reversal. Is an aggressive setup, is an aggressive move that doesn't let the price complete the accumulation process. So the problem with this setup is that the big guys are not going to have enough stock or liquidity to provide during the road, because they didn't accumulate. If they didn't accumulate, this thing needs to either make a lower low to start a accumulation process, or if it's a retrace, a wave 1 and a wave 2, we need to see the price doing something like this during wave C to have the accumulation at this area, and usually is in a demand area that we are going to check on the live chart in a second. So on the euro, we are seeing that process. On the euro, we are seeing the V-type reversal here, right? There is no accumulation. And the price, because there is no liquidity, it starts falling strongly with big candles, because there is no liquidity to provide, because they couldn't accumulate. So they can't stop sellers because they don't have enough. But eventually the price moves to a level that is interesting to these guys. It's a random level actually, and it happens the same. We didn't have an accumulation here at the bottom. So that's why the market moves up really fast, because there is no liquidity on the other side. So in order to reestablish that liquidity, we need to go to the hourly chart and start building a plan around this concept. We have the price building the impulse with an extended wave 5 here that is active. And look, is because this reversal was so strong that they didn't have time to accumulate, we are going to have a retrace, and this retrace is expected to be pretty deep. And the demand area is here, and you may be asking, what? Why is that a demand area? Well, because it's the area where they could last try to accumulate, but they didn't have enough time, and from there the price started. So that's called a demand area. So the plan now is that, yeah, the euro needs to complete this pattern, needs to make some sort of distribution at the top, and then to start maybe wave A as a strong move, wave B as a retrace, and wave C something like this slowly, and at the end showing accumulation, and from there we can go long. So that's my plan, because on the weekly chart, here on the weekly chart, the plan for this year is to move back to this high, is to have price moving back to this area, right? So look, we have the corrective, it might be done, I think that this is set, and the bullish cycle for this year. Now, there is something else that we can check here, and it's the same case that we were seeing on the hourly chart. It happened here on the weekly chart. So we didn't have an accumulation period here at the bottom, and the price aggressively went higher, telling that there is not enough from these big guys to provide liquidity. So the price, let's say that we are in this first leg, as we were back there in the first leg, and the price makes the wave A retrace and starts moving down slowly. This same behavior, that's what I want to see on the hourly chart when we have that wave 2 that I just mentioned. So once we have this 3-wave sequence and we can draw the demand zone, we know that's where these guys are going to start doing some heavy accumulation. We are going to have some noise, some aggressive movements, because they are going to try to buy everything as fast as possible. So that's why we have this aggressive movement, this attempt here to make that beautiful sideways pattern to accumulate and have enough to provide liquidity during the move up. All right, so we are here, and that is the reason why I believe we are going to have a beautiful wave 2, should be dip, now knowing that they didn't accumulate enough. And then let's buckle up to capture wave 3, to try to have at least a small position to hold during the whole cycle. That's my plan on the euro. It's exciting, right? All right, traders. So this is just a little sample of the work we do on Elliott Wave Street. We daily cover all these instruments on the Forex market, and the Bitcoin and Ethereum, and all these stocks and all these futures. So we cover a lot on a daily basis, explaining step by step what we are looking for, explaining step by step the wave count plan, the trading plan, and along with this live market analysis that you are getting every day, you are going to get a video, daily charts. You are also getting access to the Members Academy. So no matter the plan that you take, Forex, stocks, or the full access, you're going to get access to the Members Academy, where we already have a lot of content. And next week, I'm going to add the fantastic candlestick Elliott Wave course. All right, traders, as always, it's a pleasure. I'll see you inside the membership. Take care. Bye-bye.